Interesting little puke through some stops right there at the low of the ledge we just saw, and now it's kind of trying to price that in. Come get that zero print probably, and then we'll see what happens in this area. Not trading this morning prior to the numbers, NFP numbers, just kind of watching the action to get a feel for the energy. We will get started in a little bit. I normally start this session at 5:15, which is 15 minutes before NFP. Problem with that is a lot of people roll in right at the beginning and they miss the introduction. So this time I put it up at 5 o'clock, and that way by 5:15, maybe everyone will be here. So let's see. I need to turn off somebody's video. There we go. If you have any questions or comments, stick them in the text chat. You should be able to do that unless it's been, yeah, okay, you guys should be able to type in the chat. Sometimes JVC disables that. He's not here yet, so I don't think he did. It's good. Cool. All right. Good morning, Robert. Interesting setup for NFP here. We'll talk about it more in a few minutes, but after yesterday's, over here on my far left, these are TPOs. This is yesterday's regular session. Here's the overnight. We're still holding this range. All we did was test both ends of it. So anything could happen here still. Interesting, some of the technical analysis guys are like, the bottom's in, get long. Yeah, right. You guys have never traded a bear market before. We are in the middle of a typical pop. We could pop a whole lot higher, but you sell those events in bear markets. You don't buy the lows, although you can scalp them, that's for sure. But the energy clearly is still on the sell side, at least for now. And of course, NFP numbers, that's a wrench in the works no matter what. So, it'll be price discovery when we see the numbers, and that's what we're here for this morning. So we will talk about that. What software do I use? I use a variety of the mark. Good question. Far left is Sierra Chart, as is this middle. So footprints I do in Sierra Chart, basically. This 15-second view is Ninja. And everything to the right of these tapes here is Jigsaw. So at the moment, I am running all three of those. I'm also running Thinkorswim for market internals over here. And anyway, we can talk more about that. Let's see this. So that's where that went. Okay. I've used pretty much every software out there, Mark, and I regularly test ones that, as they update. And for me, if you're going to do footprints, the only software to have is Sierra. Every other platform doesn't do them well. Ninja's a legacy platform for me, and I really like equivolume views and the way that it does wave volume. So I still use that, and I have accounts associated with, the different platforms, so I can trade in different accounts at different times. It kind of allows me to hedge and spread risk. So in fact, we are doing that in this session. If I trade minis, I'm copying to 5 accounts. If I trade the micros, I'm copying to 7 accounts. So, and those are a variety of funded cash, and I've got a couple of evaluators going here too. So anyway, let's see. What is the percentage from the high that we technically say we are in a bear market? There's no such thing. If you ask the TA guys, they have, different definitions. Are we over the 50? Is the 50 over the 150 moving out? It's all this nonsense, Jeff. The bottom line is, I just look at the action. We've seen massive liquidations. That's really clear, further up and on the way down. And now we're kind of trying to find some balance. And we've been doing that for a while. This range has been in play for a while. And if you kind of zoom out a bit, you can see, this is just the top of a bounce off of the wicked lows. So at the moment, if you use fibs, we're in the ambush zone. If you use Elliott wave, this is either a B or an A. There's a million ways to measure it. The bottom line is, where's the energy? Yes, we're seeing wicked short squeezes, but they're short squeezes. They're classic. the bid never drops. People just keep hitting the trade over and over and over again on the way up, covering shorts. And then when that ends, and it, ends every time we get one of those, we see large scale passive sellers reasserting themselves. So as long as that continues, from my point of view, we're in a bear market. But the whole bear market, bull market thing is nonsense. It's bias, and you don't want to have bias. So from my point of view, I'm selling major rallies, and I'm buying and getting long into short squeezes because they're wicked good opportunities to trade. But having a major bias that the market's going back to 5,000, or that's just kind of nonsense. This is far from being over. We're just starting the volatility in my experience, and I've been around the markets 50 years now, so I'm not saying I'm right because of that. I'm just saying that that's likely. So what is my expectation for moves today? We will talk about that. I don't use price levels, TJ, 40, 70-ish, none of those things matter. It's ranges, and I will talk about that in just a few minutes. I mentioned this a minute ago. I scheduled this session for 5 o'clock because I usually schedule for 5:15. The numbers come out at 5:30. These are all Pacific time, add 3 hours for Eastern. And what happens is everybody rolls in right before the number, and they start asking all the same questions over and over again. So, and these are good questions you guys are asking. So what I'm going to do this time, I scheduled the session for 5. That way everyone rolls in by 5:15, hopefully, and then I can go through the introduction. So we're just kind of being casual here as people get out of bed and have their coffee. The short answer, TJ, is I have no expectation. That's the whole point. If you're going to be a good futures trader, your expectations are wrong. There's nobody smart enough to predict what's going to happen in the market. There's way too many variables. So you learn how to measure significant inflection points as they happen, not in advance. You can use what happened a week ago, yesterday, a month ago as context, and that's what I do. For example, I just showed that over here on the TPO view, but that's all it is. It's context. So, if we get down here, I'm not going to say, oh, I should be buying down there. I'm going to see how the order flow is. And, most ledges break. So if we get down there, it's probably going to break the low and then see what happens. Sometimes that's a really good spot to scalp long when it takes out a significant low like that. But predicting the future about the price that's where the vast majority of traders get screwed up. They come from this world where they think, that support and resistance and indicators give you any valuable information, and they don't. You got to see what's happening right now. And that's relatively new. We didn't have order flow data that was this specific even 10 years ago. That's when we first started getting good bid-ask data. So the price level is not important. The action around those inflection areas is what's important. So never have an expectation of the move. What you should do is have a plan for how you will trade the various things that could happen. And that's what I will talk about in just a few minutes. For example, NFP, any kind of big news announcement creates extremes. It always does. And, so what I'm going to be looking for is to, when we get to the extremes, I will typically look to fade them. But if the energy is really overwhelming, that's the wrong answer. The answer is to go with it. And that's the tricky part. And that's what we'll talk about. That's why I do this session, to show examples of this is a specific setup to be able to trade a reaction to new information in the market. So basically you're trading price discovery. So any price levels are irrelevant, but extremes are not irrelevant, because extremes tend to either hold as inflection points or get blown over a little bit and then they hold, or we go right through them and just keep going. And both of those are very tradable statistical events, whereas, predicting what happens, 50 points from here or 100 points from here up or down makes no sense. Good morning, Henning.
Morning, Henning.
Oh, you need some more volume, or I need some more volume.
Yeah, I think it's on your end.
Is it? No, it's on your end.
That's bizarre.
I'm at 50%, so I should be able to hear you.
Because
a little better.
Yeah, I haven't changed anything. Maybe I was just speaking softly.
Oh, there we go. Yeah, I think you were just speaking softly now. Okay. It's also this noise canceling headphone kind of does that.
It's canceling me.
It's just, it has it's a mono, it's one ear, but it has a really tight cup. So if I don't put it just in the right spot, sometimes that happens too. All right. So anyway, we will do an intro here in about 6-7 minutes. That'll give us about 15 minutes to chat before we actually get the numbers. Thank you, Amy. I appreciate that. Yeah, price, God, everyone gets so programmed into price levels and support holding and resistance holding or breaking, and that was useful 40 years ago and 25 years ago when we had nothing else. All we had was price and volume. But it's a different world. Now we have price and volume, and we can see, is that volume trading on the buy or sell side, and how aggressively, and our passives at that area absorbing it or not. And often, it's not really clear cut. You'll see a level look like there's some strength there, and then it'll fall through it. And then, then we call that a puke. And then there's an opportunity going back into the range, because it's just too easy for, the way retail traders think about price levels. And it's too easy for anybody else to just run them over because of that. So really important to try to take that type of thinking out of your mind. Okay, we're almost at the quarter hour. That's where I will start in earnest here. In the meantime, if you have any questions, feel free to ask them. Once we get going, it's harder for me to answer questions live, although I will endeavor to do that. Jonathan JVC is here helping me out as well. He's our community manager, for those of you not familiar with TRG.
Hello.
And again, we'll kind of do a formal introduction in a few minutes, and then we'll get started from there. I'm just kind of getting warmed up. I also have to say, JVC, I'm still fighting some sort of cold something. And
my other half is too. We're assuming it's seasonal, but it sucks, whatever it is.
Yeah, it's not COVID. I know that. I did. Yeah. I've got my little testing kits here. But my nose is running and my stomach's messed up, and so anyway, if I suddenly disappear for a minute, it's because I didn't feel well, and I'll be right back. And you'll hear me sniffling too, and I apologize. That's what happens when you run out of cocaine. What can I say?
Need your time machine. Go back to the 80s. Load up.
Yeah. It's funny. I joke about that, but I remember instances where I was at the CME and went in the bathroom, and there were guys, doing blow in the bathroom.
I'm sure.
Yeah. In the 80s, it was common, and it was fairly open. It wasn't, people didn't flaunt it, but it was pretty clear, that it was going on, and nobody seemed to care.
Barely illegal yet at that point. It didn't even become illegal until late 70s, I think.
Well, it was the big change in the legislation, and law enforcement was when they redefined, crack versus powder,
right.
That's when the law enforcement started seeing a big opportunity in that market, so to speak. Anyway, that's a whole nother conversation.
Everything is trading once you've been doing this long enough.
Oh, yeah. Yeah, no, it is. Totally is. And I mean, look at the economies that produced.
Hell yeah.
There's a good show. I think it's on Hulu, or it's Snowfall. I don't know if you guys have seen that. It's about the economics and kind of it's a drama, but it's about that time of in the I guess the early 80s. Yeah, if I'm remembering right. Okay, great Seinfeld episode. Yeah. 7th grade bathroom here. Yeah, when I was in high school, that wasn't quite, we had weed, but nobody did blow or anything like that. Not.
Yeah, damn, 7th grade, Summer. Yeah. Oof, you had a rough school.
Yeah, gosh, in 7th grade, I don't remember what the bathrooms were like. That was always all right, let's go ahead. Let's see. I said 15. We'll wait 1 more minute, 2 more minutes, and then I'll start. We'll go through what we're going to do today and what you're seeing. If you have any questions, by all means, ask them. And let's see. It's interesting. I see some people coming and going, which doesn't make sense. Are we having any room issues? Because normally
it's possible they're having an issue on their end and they're logging out and back in to try to solve it. But as far as I can tell, everything's cool. So it's probably their end.
Yeah, if you're having issues, try to get in touch with JVC, either Facebook or in the group if you're a TRG person. It should be. Oh, sign in 3 times. Okay, so it's a Zoom thing. All right. Yeah, sorry about that.
Funky.
Yeah, NFP can be great. I don't always get to trade it. And again, if you've watched any of my NFP sessions, and I've done a few dozen of them, it's notorious that I'll put up a limit order at the extremes and it'll get within a couple of ticks of me and I won't get filled. That happens a lot, but you got to be really careful trading with market orders at extremes when it's moving fast. And so, limit orders are just better discipline. But again, we'll see examples. I'm not promising I'm going to trade it, but we'll definitely talk to it. And I think this could be an interesting one because normally the dynamic, bad numbers mark it down, good numbers mark it up. But this is a tricky one. So I'll start the introduction this way. NFP, non-farm payroll. So it's the state of employment. And then, and the numbers lag and there's a lot of fluff and nonsense in the way they're calculated. I speak as a guy with an economics degree from UCLA. The numbers are a joke, but whatever. They're the only numbers we get, so we have to work with them. And NFP is tricky though, because a bad number sometimes rallies the market because it thinks, back in Fed intervention days, that would make the Fed more aggressive. But now, in this inflation environment, it's a really tricky calculus. So the absolute last thing you want to do is try to predict what's going to happen. And yet I see people all the time, if the number comes out of here, we're going to go down to and retest 4070. People say stuff like that. And again, predicting the future makes no sense. It's daft. And it's nonsense. Nobody consistently can do that. There's far too many variables. Even the best econometrics people at the biggest trading banks don't get that right. So why even try? People like us, the best thing for us to do is wait for these kinds of things to hit and then assess the reaction and look at the reaction for opportunities. And typically the reaction to numbers creates opportunities at extremes. So if you look on my TPO view on the left here, I'll blow it up just a bit. So this is our overnight session here. We're near the low of it. This is yesterday's regular trading hours. The blue lines are the initial balance or the first hour. So there's a lot of energy down here. We held it, but barely. And there's a low below that. The most recent low is below that if you zoom back, right? So this is an attempt to bounce off the low that's right at the ambush area where anything can happen. So the extremes, as I would define them, are anywhere down here would be a really tradable event. Either way, I would watch that very carefully. If we were at the top end of the overnight range, that would also be interesting because that's up near this big fat hole number of 4,200, which I think, bounce 4,200 to 42.5, 43-ish, that would seem like the perfect place for shorts to reassert themselves if they're going to, or sellers. And so that wouldn't shock me at all. And so, if the number is quote unquote good and we manage to get up there, that could create an interesting short opportunity. Now, that might not play out while we're doing this session. I have to make that clear too. We get numbers at the bottom of the hour, and that's in about 14 minutes. And this session will go another 50 minutes past that. So we'll go to just before the top of the next hour, 6 o'clock my time. And then the regular TRG Friday live trading session that I do is scheduled. So this session will end. Those of you in TRG, go to the regular Friday link and we will open that session. Those of you that are guests from the public, that is where we will wrap up. So this session is going to be about another hour and change. And usually if there's going to be a good response to the NFP number or any economic number, it'll happen pretty much right away. So hopefully we'll get a chance to trade it. Real quickly, a bunch of you asked me, what's on my screens. Far left are TPO views and Sierra chart. Just to the right of that, these right here are very fast ninja views. This is what I scalp off of. Footprints here with Delta. This is Delta footprints only. These are, again, Sierra. I do anything with footprints in Sierra. And then everything from these tapes to the right is Jigsaw. This dome, or these two domes, these are NQ, MNQ. This is liquidity for ES. This is ES and MES. If I'm going to trade, I'll probably trade the micro ES over here on the far right. And you'll see it come up in the dome right here that I've got my mouse on. Might trade the minis, but I'd rather trade blocks of micros when it's this volatile because you can really end up upside down fast with a block of minis. Also in Zoom, sometimes we get some lag. My interaction with my platform sometimes gets a little laggy. So for that reason, I'll probably stay in micros, but it's possible we will trade the minis. We just get ready to do that just in case we do. Okay, so once again, let's see, what else can I tell you about? This trade is about extremes, as I said. If the number comes out and it's uneventful and we're just in the middle, we just turn around a bit, sometimes that creates great scalping as well. But I'd rather get the extreme event. That's just so much more tradable because, look, price discovery is when new information comes into the market, like NFP, and the market has to price it in. So buyers and sellers put up their orders and we move around until we achieve balance and we get back on an agreed upon area of price. And you'll see that just based on volume nodes. The more volume at a price, the more stable it is. So if we can, build a big high volume node around an area after the number, that's an indication that the price discovery is pretty much over, and then we can scalp the range. But what typically happens is we extend the ranges. We test lows or highs, and we test high volume nodes to see if they'll hold. And so we'll keep an eye on that over here on the TPOs. As I said, the bulges are what I'm referring to as high volume nodes. And let's see, what else? We have guests here, and we have TRG regular live trading members. I do use some terminology that you may not be familiar with. We'll try to kind of define it as we go. If you have a question, please put it in the text chat, and please don't just say, why did you do that there? Or, is that because of X? Give it some context. Say, at that, when you shorted, 4150, because we may not get to your question right away. And that way we'll know, what the context of your question was. So also, if you have a question and we're kind of moving on, you can always type, I have a question, and then, we'll wait for you to actually frame your question. Let's see.
Type a Q in the chat.
Yeah, that works.
Super quick and dirty way.
Exactly. Yeah, it is a busy day for me, Robert. Last Friday, I just had live trading, and that's it's a busy day anyway because it's early and it's Friday. But the last time we did this, I kind of had a break, an energy breakdown after doing the 2 sessions, and I kind of collapsed for the weekend. So I'm pacing myself a little better this time, I think. Anyway, yeah, the whole predicting the future thing, TJ, is exactly that. It's bullshit, but when it works, it looks really impressive. Wow, good call. You see people say that, good call. That's such crap. Trading is a lot more than just picking a price level. You got to execute against it. You got to manage risk. And, so whenever I see people saying stuff like that, I immediately understand the level of their experience. So
that's why I like good read.
Yeah, good read and good execution, because the result, if you make money or not, it's often luck. The trick to surviving and profiting as a trader is having a definable edge that you can exploit over and over again, because by statistical fact, that means your equity curve will grow if you in fact have that. But, just every now and then having a good call and making, $10,000 or $100,000 or whatever, that's not how you make money in the market. That's gambling, that's rolling the dice, and the odds catch up with you doing that. It just doesn't work over time. It can't. So anyway, one other thing about that. The purpose of these sessions is not to show you guys, here, watch how much money Jeff can make, on NFP. I'm teaching and I'm showing, how I traded and why I traded and what the theory behind what I do is. If I trade micros here, I'm demonstrating technique that you can, it scales to the minis perfectly. So, it's about the right process. The results, come and go based on, quality of execution. But it's the tactics, the approach to trading that you should be focused on. If you ask any experienced trader, and experience meaning, significant experience, more than 10 years, say, and you ask them what's the most important thing, they will always tell you it's the process. Nothing, the results are, come and go. They do. And you got to get used to that too. It's, a lot of new traders have trouble with that. They'll have a winning streak and then a losing streak. And, every trade is just playing the odds. And, sometimes you go, look, if you have a 90% win rate, that still means 1 out of 10, you're going to lose. And even with a 90% win rate, which I have right now, which is way too high, by the way. And there's still times where I could go 5, 6, 8 trades in a row that don't work. And that's just the way it is. Sometimes it's my execution. Sometimes it's, the setup is there, but it's just didn't work for whatever reason. So you have to really understand the numbers help you as metrics to measure your performance, and prices and the action around them can give you an idea what's going on. But your process will determine whether you have long-term effective results. Here's a really good example. We just traded down into this edge of the range right here really aggressively, and then it just stopped right there because there's demand there. And so is that price important? No, it's that it happened. That the momentum down stopped and the buyers stepped up right on the edge of the range. That's why I measure these LRC ranges. They're statistical ranges. And that's very common. It's not that the indicator that you buy here, it might blow right through that. But typically, if the range is going to hold, that's what happens. It will get to the edge of the range and you'll see buyers step up, or on the other end, you'll see sellers step up. It takes new information to break out of a range when we're trading in a range like this. And right now, the new information everybody's waiting for is NFP. So between now and then, the ranges tend to hold, because why would anybody get aggressive here? They don't know anything yet. They don't know anything new. And likewise, we're building out a high volume node right here. You can see, and that's what, as this range goes back and forth, that's what you'd expect. So the extremes right now are going to be a break of that range we're in, either way, to the up or down. And then the next extreme will be the low, and the next extreme going this way will be the high, or maybe this high volume node right before it. So we have a pretty juicy setup here to play with, depending on what the numbers look like. And again, it's the reaction to the numbers. People say, what is the number? I don't care. I really don't. I have it running on my other monitor. Oh, and that's one other thing you should know. There's 4 monitors going here, and I'm seeing other information. You guys aren't. And if it's really important, I'll share it with you. I am watching a footprint with a 30-minute on it. That's kind of my structural view of the market right here. And so this one I kind of duplicate so you guys can see it. And I'll pop that up as needed. Otherwise, I'm watching all 4 of the indexes here on the far left. I'm watching the energy and ES and NQ most carefully. And I generally don't trade NQ for news events. It's just too volatile and too thin. ES moves plenty and has a better tick value. So we'll be trading ES or MES if we trade anything here in this session. I was going to say class, but it's really not a class, this session. I try to teach and make everything a class if I can. That's the whole idea behind TRG, but can't always do that. All right, let's see. Just signed up for the TRG course and began working with it. Which TRG course, Mark, are we referring to?
He's in art of tick making.
So TM2.
TM2, yep.
TM2, okay. And you get your access to TPO from Tradeovate. I would avoid Tradeovate like the plague. It's not a good place to do what we do. It's the poorest common denominator. Best software to start with from scratch would be Sierra Chart. Ninja's simple to get up and running, but it has no ability to do good footprints, so you'd still need Sierra Chart, so you might as well start there. I like Jigsaw to execute on my platform on the far right here. I'm a fairly aggressive scalper, and in my opinion, there's just nothing like Jigsaw for managing trades quickly. And if we get some trades, you'll be able to see that. I can move orders and stops and targets really fast just by clicking on price, and it automatically figures out what I'm doing pretty well. If you've got any familiarity with Jigsaw, I highly recommend it for execution. And, depending on the kind of trading you're doing, you may not need anything else. I can trade just around the liquidity map here and the traded volume. This is basically a footprint right here on the dome that I can reset anytime I want. And that's enough information for me to scalp most of the time. The rest of this that you see on my screen is mostly just context for me. Like, I measure wave volume back and forth here. You can see these are on each of the zigzags, how much volume was there. And, when we're going up, this is typical. You'll see low volume pullbacks, higher volume springs up, so that's the kind of stuff I'm watching over here. But it's not an indicator. I'm not waiting for one line to cross another to do something or something to turn green or red. That's Furu newbie nonsense. I'm looking at the information and I'm making a discretionary judgment on that information. Okay, we have about 3 more minutes. If you have questions, by all means, stick them up in the chat. I'll try to get to them. I'm reading along as we go. So we covered the, the book is thinning. Oh, by the way, you're seeing a map of the order book here, which is Jigsaw's Auction Vista. I'm actually running the liquidity on a dome behind the one that we're on. So you can see the liquidities right there. And yes, it's getting very thin. I'm just not trading that account right now. So the account we are trading, I just put in front of it. So that's why you're not seeing liquidity here. But the liquidity on the map, which shows up as the white areas, that's relative liquidity at different levels. And that's what I want to see. And then the bottom here in Jigsaw's liquidity map is just a summary of the flip. That's stacking and pulling summarized over 5 levels. And then this is just volume on the bottom. So. Let's see. Yes, LRC is a linear regression channel, and linear regression is really simple, Jim. It's just mathematical way of expressing the best fit. So these lines are saying that this period of data, this represents the best fit of that data. It won't be all of it. It won't be a channel of it. It's the best fit statistically using a sum of squares method. If you're familiar with statistics and math, you don't need to be, just use the English. It's the best fit. Okay, looks like we are about to get the number. See how it's just popping around. We're sweeping, 8, 10 ticks at a time. This is not tradable. You don't try to trade it. Again, the idea is to wait for an extreme after the number. And, it looks like the low might be in play here. So I wouldn't necessarily short it if it goes through there, but I would look to see if the buyers step up anywhere. And if the momentum gets really aggressive, then I would join it to the downside. But I wouldn't just join the first impulse down, because that's often sort of a head fake. And look at this. This sweep right here just went from 43 to 50.75. That's in a millisecond. It went 10 points. You can't trade that. You can't manage risk under those conditions. Okay, we got our numbers, and obviously the market does not like them. We're going down, but we're holding that low. We immediately tested that low. Now we're going up to the other end. So again, this is price discovery. It's pretty crazy. I wouldn't want to fade this at the moment at either end. In other words, I wouldn't want to buy the low here, and I wouldn't want to sell the high yet. It's just a little too, there's too much price discovery. It's going both ways, in other words. You can only fade an extreme if it gets to the extreme and goes back the other way. And right now we're getting two-way action. And by definition, two-way action is price discovery. The market auction is trying to find value, and at the moment it hasn't found it. So whatever this cold thing is really annoying. 1 minute I'm freezing, and then I'm hot, which I usually am. All right, so what's going on here? We got a little bit of a range working. Let's reset that and watch there's a lot of volume right here. You can see that's what those circles represent. Hang on here, let's repaint that. Yeah, I still wouldn't try to trade this, but judging by, what did it do? Let's just have a look. All it did was, this is the range we were in, and all it did was test both edges of that. Like I said, it just didn't go far enough to play. So basically, the numbers are, we pushed down, but we didn't push down aggressively enough to buy or to go short with. And we pushed up, and you probably could have sold up there, but it's not extreme enough. Again, we didn't get up into the extreme areas. So the other hand, what we are getting is we're getting a decent range building here. So if it settles down a bit between now and the top of the hour, we might be able to get some good range trades off, which I generally don't do this time of day because ranges generally aren't this solid, but let's see what happens. If you have any questions, stick them in the chat. I will get to them shortly because I have a feeling we're going to have to watch this for a while before we get any opportunities. Bit of absorption going on right here. Might be a potential short there if that keeps up. Let's watch that. It's right on. This is the edge of the value area right now where the shading stops. That's the value area low. Again, I don't trade off that, but it's a reasonable just metric of what's going on. This is the VWAP right up here at 65. So, that's basically balanced average right there, and we're not far from it. So the market has found some balance here. It's still in price discovery, but if I had to to put a bias on it right now, I would be looking to get short, but not aggressively and not at any random prices. Obviously some interesting spots. Obviously if we got up to this high volume node, I would like to lean on that, but we're way too far away from it. The VWAP is right above us. That's kind of the middle. And it's just working too big a range to trade it right now. 52 to 58. That's just too much danger both ways to try to play that, even for just ticks. How often and when do I clear the dome for scalps? That's a great question. And the answer is there's no rhyme nor reason. I do it when I want to see a fresh footprint. And I can clear two different ways. I can clear just the current trades, which is this first two columns that the momentum is being plotted in. And that gives me a sense of, this footprint is since the last time I reset it. So you can see there's a high volume node forming right there. And now we're extending the range of this little baby footprint that I reset to, and it's holding this high volume node. So if you do it at the right times, it gives you a really fresh look at what's going on. And basically I do it whenever I want to get a fresh look, because I've got history over here. So like, for example, if I did it right here, let's see if it builds a new range right around these two high volume nodes for us. We should see push up into here and then trade back here and then push down into here and trade back. So right around 59 here, 59.60 is what it's trying to do. And you can see the momentum. These kind of, pinkish and bluish, depending on your color palette at your end. That's the momentum, and that's another Jigsaw feature. It kind of measures the momentum in each direction. I've got it on 500 milliseconds right now, so that's what that's. And it's coloring. The darker means more momentum and bigger volume. So as it gets darker on the way down, you can see there's momentum coming into the market. On both the sell and the buy side, though, as we're pushing down, there are buyers here, but the price is still dropping. So sellers are in control, basically. Let's put the footprint up and see where we are in the structural view. So, you can see there's some absorption right there at the low. That's that big giant delta. That's the overnight low and the current low of that we haven't opened yet. So that's the overnight low, and this pullback low is what I mean. So, this is the bar that we've had since we got the numbers, and the top is clean, and we're kind of still working. We swept up through here. That's why there's zero prints. That was kind of aggression off of this absorption. So again, it's we have value here. We're trying to find value. It's just working a really large range to do it, which is the reason I'm just not interested in trading it yet. Ooh, we might have a trade coming up right now. Let's see if we can get a long down here. I was too slow. This little high volume node right here is interesting to lean on, particularly if we blow through it and test the low. Then it's going to be very interesting on the way back up, particularly. So let's watch that one. I can reset from my mouse. I just did that without pressing these buttons. So now I want to see how it's trading this breakdown here and see if there's any buyers absorbing it. And right now the buyers are absorbing, the sellers are getting absorbed here. So we're holding, but see right on this liquidity, and this is very typical, and we kind of traded off of that spot before. I think we're going to go through it to the downside here, and that could set up a really interesting long into this liquidity, like right there. So and again, I'm just looking for a snapback. It could blow through the lows, but it doesn't look like it wants to do that. See how buyers step up on each pulse, and the liquidity kind of pulses up with it. That's typically a spot that is we're probably going to go back up into this low volume here, and I'm not going to get a fill down here. But it's just not a good spot to be aggressive, because I think this low is going to, or this right here, I think this is going to go. I think we're going to break that down, which is why I'm trying to buy right below it, just for a quick scalp. People always say, there's no way to scalp this. It happens way too fast. Wrong. The way you scalp it is you set it up for it to come to you, and let the market come to you at a spot that you would play if it got there. Don't wait for it to get there. Have a plan for when it gets there. So, this is a low risk long down here. If it blows right through me, then, I'll get out of the way and I'll lose a few ticks. But, you can see there's been demand down here, and it's at the edge of the range. So, the odds are in my favor. Even though I'm going against the direction at the moment, it's a little bit of a counter trend trade. Anyway, let's see if we get this one. I think we might. if I was really aggressive, I'd be buying right here on this liquidity because it looks like it wants to hold this range. And yeah, there it goes into the low volume node again. So anyway, that's the name of the game, is to kind of watch for potential events like, if we come down and fill these zero prints and, there's real strong demand down here, so that it's not going to protect me, but it'll, if I'm wrong, I won't get totally run over. Here we go. It's coming down right now. Let's see if we can catch a quick long scalp into this. It's coming down pretty aggressively. I don't know if I want to get these guys that close together. Let's get okay, then we can just throw a target up and see if we can catch some ticks the other way. And there we go. We got 7 ticks in a total of, how's 5 seconds sound? Can't lose a lot of money if you're only in a trade for 5 seconds. Let's see if we can get this other one. I'm also going to stake some out further down, because so far this idea is a legitimate idea and it's working. So, okay, let's see if we can get another, about 7 ticks on that one. This low looks like it wants to go though, so I may be off here, but that's the beauty of the micros. I can scale in all the way down to here. So let's see if we can't get 10 micros on down here. And I'm copying this to 7 accounts, so 1 micro actually, is a decent trade. Okay, there we go. We got another one. So, wash, rinse, repeat. That's what I mean by trading extremes. That's a really good example of it. We're not assuming the low is going to hold. We're just taking advantage of it getting tested. That's all. And, it's probably going to go. We're probably going to break down. You could play this short too, but the problem with that right now is the bounces are just a little too aggressive. The bounces I'm, shorting, I'm getting long on and making money with. That's the problem. To short that, you have to be in a good entry to play short. Like this, the value area low here would have been a good place to play short from. But down here, just too dangerous. Let's see if we can't catch another sweep through the low and get long again. This doesn't mean I don't think that, we're not going to keep going down. It's just an opportune place to scalp the extreme. That's all. See, because we get these really nice 6, 8, 10, 12 tick pops every time it pops. And so, play them. Now, new traders often get run over doing this because they do it too early. They try to buy the lows, and the trick to this is you got to let the low go. So, see, this is the low, and when that breaks down, it will trade into me. And that's what I'm trying to accomplish here. So here we go. I think we'll get one right now. See, it's right on this same spot of absorption. So, that might puke a little bit to the downside, and that would be a perfect place to get a fill. Rookies would be buying right here, which is dangerous. And you could be shorting right here on a breakdown of this ledge, which isn't a bad trade for 4, 5, 6 ticks to the downside. But I like to play them the other way. That's just personal preference. But those are both legitimate trades on this ledge break. Look at that absorption. Okay, so we got filled there, and then, immediately, you can catch ticks going the other way, and gosh, right there, it traded to me. Come on, there we go. Okay, so that's a very predictable tradable event. That it's one of the reasons my win rate's so high. You can 9 out of 10 times I can do that and make money, and when I don't make money, I can get out of the way fast because I'm already at the extreme. It's if it's going to blow down through here, it's going to take it a little time because there's buyers here trying to absorb it, as we saw right there. And now as I said, it puked through that, and the buyer stepped up again. So, being married to that price level makes no sense because, it's working a range around the price level. That's the message here. Let me cancel this one real quick, just so I can keep talking and not have to watch that fill over there. Okay, so let's see. Yeah, that must be your Zoom, Karsten. Okay. Yeah, perfect, Amy. You can definitely scalp both ways on this. There's lots of it's a target-rich environment. There's lots of opportunity because it's at an extreme, and you can always play extremes both ways. Ledges always break, so shorting into these makes a lot of sense. And I do that too. I just do that when we're at momentum and not in the pre-open. In the pre-open, I like to play extremes counter trend. It's just my thing. But clearly the market has a strong selling here. The problem with shorting into this, if you're at the wrong spot, is you're the guy that I'm taking advantage of when I scalp long, and other people do the same thing. So, but both are totally legitimate. Absolutely. Okay, let's see. We have about 5 more minutes of this session. I will answer more questions. We got some trades. And again, with the copying, we're actually up over $100 here, and all I did was trade micros twice for the one lot. So copying when you're doing that and you're managing risk makes a lot of sense, because then you're just spreading it across a lot of accounts. And if you're trading a lot during the month, the $90 fee or whatever for each account doesn't cost you. You still have a profitable business. So anyway, that's why I do that. And this, clearly we have down energy here. But in the pre-market, staying short, dangerous. Also, I need to point out, I know the TRG people know this. I'm running the leveraged ETFs short fairly aggressively. I have half a position on there now. And so trading, I don't need to trade short to make money into the futures because I'm already short, basically. So that's another reason I'm scalping. It's kind of my way of hedging myself. So, all right, we have just a few minutes left. What other questions can I answer for any of the guests? And again, thank you for joining us, guests. You got to see a quick little example of some of the stuff we do in TRG, a lot more comprehensive. By the way, UB at the bottom here, guys, that's unfinished business. We will probably go lower at some point, but maybe not right now. So that's worth watching. Anyway, TRG folks, the regular session starts at the top of the hour in about 10 minutes. We will start that one on time. You will need to leave this one and go to that one, obviously. Different link. You all have that in the calendar in TRG. Let's see. Okay, I'm looking to see if there's any other questions. Yeah, copying trades is something you shouldn't do unless you're really skilled at one setup. That's my recommendation. For example, this setup I love to do in micros because I'm doing it in one of my funded accounts at Lilu, and it's copying to another 4 funded accounts and an eval and a cash account all at once. So, one micro, I make $5 on, let's see, what did we make on most of those? We made $7.50 on most of those trades. So, that's the 6 ticks before commission, obviously, a buck for the commission, and then multiply that times 7. So, that's a $50 trade. That's how I'm up $100 so far. So. Tradevate is the charge. Tradevate is a cloud version of an ancient futures platform, Mark, and trust us, Tradevate is the wrong answer if you want to be an active trader. They partnered with Top Step because there's good marketing there, and people want to trade from their phones, which is nonsense. The markets are way too fast to trade from a device like that. You need a computer and a fast connection. So there's a lot of issues with it, but when the market is moving, this is the big one. When the market's moving really fast, the cloud nature of Tradevate makes it the most likely to give you problems. And I've tested it extensively, and I've had continual problems with it whenever the market's active. And there's just no reason to take that risk. That's my opinion. The best for simulation, the simulation is always done, well, in most cases, it's done by the data provider. So, your platform is about learning how to trade. So don't think in terms of simulation. Simulation should always be your practice of reality. So you have to get it as perfect as you can. So, so you should be building it out to trade real money. That's your goal, right? So start with something that's a good platform for trading real money. Okay. What other questions can I answer? I got about another 3, 4, 5 minutes about anything we did today, which is what, Ninja? No, if you want to learn how to trade order flow, Mark, Sierra chart, as everyone said earlier. That's the one that's doing this trade right here, because you need to understand the bid-ask action. And Ninja doesn't do that well, even with third-party software like MZPack or whatever. It's just the architecture of Ninja isn't designed for it. Ninja does really good price action views like this. I find it really visual. And I love the equivolume views of the bars. The wider the bar is here, the more volume it represents. And so that's really visual for me. And I already had it. I've had Ninja for, 10 years. So for me, it's a legacy platform. But if I was somebody starting out brand new, I'd be looking at Sierra and or Jigsaw. That's my recommendation. No, forget the brokerage, Mark. You can do brokerage with anybody. It's because of the quality of the charting information. Yes, it has the ability to display things that are going on in ways that are really accurate and useful. And if you try to do it in Ninja, the same type of footprint information, it's really hard for Ninja to keep up. And I have really fast computers, and I have 50 years of IT experience. So I'm speaking as a computer geek. I worked for Microsoft as a trainer, training salespeople for 5 years. I worked for IBM. I'm a venture capitalist in tech. So I think I know what I'm talking about. And Ninja just doesn't have the right architecture. We're developers too. TRG is partnered with Emoji, Lee Harris's company. And so we know from what we speak, okay? Sierra gives you the ability to evaluate bid ask, in other words, order flow data. So that's the key of having something like Sierra. You can do that in TradeEvade. It does have bid ask data, and it's reasonably good at that. What it doesn't do is it's not stable. That's the problem with TradeEvade. It's not a stable trading platform. End of conversation. Okay? But information-wise, Sierra is the way to go. Ninja does really good price action and technical analysis stuff. But again, the footprint data, it just doesn't have the right architecture to do footprints efficiently. Sierra does. Okay, you guys are okay. I will let you guys debate data feeds and whatnot. We don't need to go into that more here. Okay, so I'm going to go ahead and wrap up unless there's any other questions about what we did today and not platforms. I appreciate the platform questions, but the purpose here is do I copy trades on Jigsaw? Yes, I just said I'm copying the trades you just saw me do are going to 7 different accounts. Some of that's going through the trade copier in Ninja, which is Apex's version of whatever the thing's called.
Replicanto.
Yeah, that's that. And I'm also got a little bit of code of my own that sits on top of it and handles some of the other copies. Like you can do multi-broker in Ninja, and that'll copy across brokers. You can also just run your own little VPS between 2 computers and have one computer on one brokerage and one on the other. And that's what I'm doing for that. So that's how I'm copying from both evals to cash accounts. Okay, good question. Jigsaw doesn't have any built-in trade copying capability, but it can handle multiple accounts simultaneously. And that makes it really powerful too. See, we pushed the low again. I wouldn't be necessarily trying to get long down here at this point. I'd probably let this go, maybe join the momentum. But again, right before the open, I don't like to be real aggressive. And we'll talk more about this in the TRG session, which starts at the top of the hour. So, okay, are there any other questions about anything related to, yeah, it does, Amy. The sellers are definitely pushing down the bid here, but like I said, we're getting bounces that are tradable long. So I'm not in a hurry to just sit short. Particularly again before the open on an NFP day, I want to see the initial balance in the open 5, and then I'll reevaluate it. I think that's the right answer today. Okay. Any other questions, comments? I don't see any that I missed. JVC, do we have anything we need to add?
I don't think so. This was cool. The special thing this week was this session. And
it's all hope you enjoyed it. We got to do a few trades, talk about a few things. I hope it was productive for you. I enjoyed it. We'll see you again next month in the public. And TRG folks, you're welcome, TJ. We'll see you guys in the next session in about 6 minutes. I'm going to take a quick break, and we'll see you then. Thank you, Summer. Always good to see you. And let's see. What is that other comment? Oh, I'm sorry. I read that already. Okay, I'm sorry. I'm just trying to read and talk at the same time, which doesn't always work out well. All right, we're out of here. I'll see you guys in a few minutes in TRG. Thank you.